Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at the macro side of things with Macro Monday. Quick little crypto commentary here. Flows report from James at CoinShares, mildly positive between Bitcoin, ETH, and multi-asset last week. It's August, it's September. Seasonally, not the time to make any large moves for anybody. So not a whole lot going on here in general. As far as the basis trade, it's still there if people want to access it. The question, since people discovered this was a thing, and Millennium came in with $2 billion to make this trade, to take this trade, how much of the flows in and out are basis trade related? And assume if flows are up big and price goes nowhere, that is basis trade related. That is shorting the future longing spot via ETFs. Open interest hasn't really moved either. It does exist for ETH as well to a lesser degree. So if you had to choose between the two, you're likely going to go with the BTC basis trade. As far as BTC itself, still below the cloud. Trend-wise, nothing to really do here. Bearish 5200 cross, not on the chart. Next move will be price above cloud, bullish 5200 cross. The same thing we had in October 2023. It would not surprise me whatsoever if we see something to that effect into October, in and around the election, in and around rates coming down, in and around liquidity coming back. We have to dodge recession. We have to dodge World War III. But the near-term price action, to me, is irrelevant because there's just zero expectation to do anything here. Looking at positioning from Credit Market Report, this is the COT, COT, CME positioning. How these work, how the system works for Jason Shapiro. He likes to see commercials in the red there long, and he likes to see large and small spec short to take a long position. So we basically see the opposite of that here. We see large spec in the blue, long again. We see commercials short. This can flip-flop back and forth. The best bang for your buck is always going to be max positioning one way or the other. But this is just another reason to probably not expect anything material on the long side. Ideally, what we want to see is max crowding on the short side, which basically sets up a short squeeze. ETH, also similar in the red there, commercials, net short, large spec, small spec, net long, not by much. There's really nothing here, right? You want a crazy dynamic setup so that maximum people are off sides, and that's just not what we're seeing on either of these assets here. And as far as alts broadly, Capriol Investments has this spec index and breadth index. And one thing you'll note, this is basically alt season, right? Is alt season here or not? Is it almost time? Everybody wants to know. I just don't get it. So 90-day returns greater than the BTC. That's what this is measuring. What percentage of altcoins have 90-day returns greater than the BTC? And that is less than 10%. So two things to pick out here. When do you think is a better time to buy or sell? That's number one. And then historically, based on seasonality or months of the year, when do we typically see a pop from the 0 to 10 bound to the 80 to 90 bound? Well, best time to buy is definitely when things aren't overheated, okay? But I prefer a little bit of strength, so we're not just meandering around the grave here. So that's basically where we are. Not much strength yet, but worth paying attention to. Based on the calendar, if you'll notice, every October, regardless of what's going on, tends to have some sort of action, some sort of activity. And you can look at post-halving, you can look at a year, pre-post-halving, whatever. You can tease it all apart. But once again, this is lining up for a potential move into Q4 or Q2 2025, whatever. Eventually, if we are actually bullish, things will swing around to alts eventually. But that is probably going to take at least another 3 months, if not another 6 months. So what to watch for? I would watch for this index breaking above 10%. Similar to these point of no return metrics like the SOM rule, when we break 10% from sub 10%, it typically is blast off, take off. That's what you're watching for. It's just another metric for your alt indices, and the breadth metric, very similar. We're not seeing any strength really outside of the top 50, top 200 relative to the group. It's mainly just a few coins here or there on any given day. So yes, it's definitely not alt season. It's definitely, almost, maybe, possibly, probably alt season in 3 months. Okay, so sit tight, have some patience, figure out what you want to buy when the time is right, but don't expect anything positive here for the group at the moment. Before we go any further, on the legacy side, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, Kraken. I'll talk about SUI and Zcash real quick. Not that I want to, but they're one of the few alts that are actually moving higher or doing anything, right? SUI's out of the down channel, which is great for SUI. It is at the 50% retracement of the high to low here. In the near term, I'm not really too sure how much is left in the tank. If we just pop on the cloud, it's still inside of the cloud. Your best moves are always going to be above the cloud. A great theme for this video is almost nothing is above the cloud rather, in the risk department. And there are a lot of risk off vehicles that are above the cloud for the first time in a long while, or in Gold's case, holding above the cloud. So this would be an out of alt season transition for something like SUI and something like Zcash. If we dial this back to the weekly, there was a megaphone, you could call it, at the bottom here that we're trying to break out of for Zcash. So far so good. You have a bullish TK cross with a close inside of the cloud. That is long edge to edge criteria. Based on the fibs and measured move of this pattern, of this consolidation, I wouldn't expect anything far beyond 100 based on the historical support resist level of 100, psychological resistance of 100. That would be my take profit. If I was in this trade, I am not, but that's something to watch for on those two. For the calendar this week, we have PPI, we have CPI, we have retail sales, a bunch of other surveys, a bunch of data. I don't think any of it's really going to matter in a big way. The market's going to move on every little data point. But the big thing is not this week, but next week, Jay Powell at Jackson Hole potentially giving some sort of economic outlook, some sort of forward guidance, some sort of comment on the market and or rates. That's what people really want to see. And then, of course, September is the FOMC meeting. All the more reason just to sit tight in the near term. Let the market come to you. Looking at Truflation, holding far below 2%. At this point, we cracked 2% in July based on the real-time estimates of Truflation. 30 data sources. I believe they say 10 million data points go into this. Basket and weighting is a little different than CPI or PCE or core or any of that stuff. But if you wanted to hop in your time machine and see where CPI, PCE should be headed, it would be watching something like Truflation. It was correct on the way up. It was correct on the way down. It is going to lead CPI calculations. But this would be the first thing. If I was concerned, for example, for a runaway inflation, 2% and beyond, 6%, 12%, this is the first place I would go to see, okay, what are the real-time estimates showing? If we do have problems with inflation going forward, it's not just going to magically show up. Yes, shipping is high. We see that in the data. It's not showing up in Truflation yet. So if you're ever concerned with a divergence between CPI and reality, this is a great place to check. The UK as well, also hovering around that 2% level, up from a low of sub 1%, but still in the wheelhouse where federal central banks, global central banks would want to live and be. Looking at the nowcast for CPI from last month, it's going to be no change month over month, most likely. If we are 0.01% plus or minus some rounding error, is the market going to flip out? Probably. If we get like a 2.9, which I doubt, but we could see a 2.9. Truflation would favor a downside surprise rather than an upside surprise on CPI. If we do get that, I'd expect the markets to celebrate that number as we're getting closer and closer to 2% on the target. 12 days in, this month's CPI, according to the nowcast, around 2.74. Core and PCE are all over the place. Directionally, they're headed in the right direction for the most part. Core here rising on a month-over-month basis, but we are only 12 days in. GDP also hovering around 3%. We're spending like mad. We should expect positive growth. If there is negative growth with all this deficit spending, then we're in real trouble. But how much of this is real GDP versus deficit spending? That's the question. Nevertheless, the number's the number, and it's positive. Looking at the yield curve in the black here, that's this week. So we're up a little bit from last week in the green, still down across the curve from where we were for the past 7 months. You can see a lot of chop in yields here all over the place. It's going to be interesting to see how the yield curve looks post CPI print this week and post JPOW speech next week. And then ultimately, of course, what we see in September in regards to rates. Is it a 25? Is it a 50? The market thinks it's a 50. Market is usually not wrong leading into the meeting. The market is almost always wrong after the first meeting, but I think it's 30 to 60 days, something like that, leading into the meeting. Usually the predictions are correct. So what happens to the curve after all those events? Definitely something interesting to watch, especially because we risk and very likely will see an uninversion of the yield curve here. Rates down, unemployment up. With an uninversion of the yield curve, historically has meant recession. Is this time different? We'll see. We'll see. Most people likely assume recession at this point. And then it becomes a matter of to what degree relative to the election. When do we see that? How much printing do we see relative to the recession? How much job loss do we see? More questions than answers, but we're not there yet. I think the market is spooked and concerned with the yield curve, just as it was with the SOM rule and unemployment print. And that's why we're seeing some consternation jumping back into risk with both hands, despite the massive bounce we saw after a large portion of the yen carry trade was unwound. DXY also headed lower. This, anybody with a brain, okay, and trend metrics is going to tell you this has been chopping for 2 years or whatever, but the micro trend is clearly down. So the next thing to watch on top of everything else is, okay, dollar strength. Does it become continuous dollar weakness? How does crypto react to that? What does UJ look like? What does everything else look like in the context of a weakening dollar? UJ so far has stabilized. That's good for global markets, but there's still this unwind of the carry trade likely to come eventually beyond what we've already seen. So we have lots and lots of sensitivities, lots and lots of unresolved conflicts in the markets, let alone globally, geopolitically, that I think many people are just wait and see mode for the next couple months. This is my daily pitch for TLT, which continues to look like one of the best looking charts out there, popping above the high time frame cloud, above the diagonal resistance. First bullish twist on the cloud since 2021. First close above the cloud since 2020. And a lot of this at this point is relative value. It's rates coming down. Yes, we're issuing a lot of debt. I get that, but technicals look very good for TLT. Is this going to outperform everything? I don't know. All I know is I like the trend reversal. I'm a trend trader. That's about as far as I go. Gold also looks phenomenal here with this continuous sort of up chop, trying to make higher highs. It held the cloud, bullish TK recross. It held the key June. And the next step here is to bust out of this diagonal resistance. If this does break up, you'd expect something in the 26,000-2700 range. Back to positioning. I don't think positioning is favorable for gold to break up here, but it may not matter. Technicals look better than almost everything for continuation here on gold. Oil's up 3.5% today, likely because of what's going on in Ukraine, Russia, the Middle East. Still in the range, still range bound. But the higher this goes, the more warning bells will sound for a lot of people thinking, okay, the market's taking this seriously and this matters for the economics of oil. Does that make its way into inflation? Does that make everything more expensive energy-wise? Things to think about. If we see oil in the 80s or into the 90s, that would be extreme. And that would probably send ripple effects across everything else on the risk market, in the risk spectrum, right? XLE, kind of like gold, it doesn't look terrible here. It's held above the weekly cloud despite trying to break down. I'm still in this trade personally. I'm in TLT personally. I think that's obvious based on the number of times I've talked about TLT. Yeah, I really like TLT here. XLE still in this ascending triangle potential. So I don't hate it. But again, this is not something that's going to move like an altcoin, most likely. This is going to take time to move up. And if anything, if energy is up, if risk off is up, then the rest of your portfolio is probably going to be down. So in some respects, it is a hedge for the rest of the portfolio. As far as the S&P in the cloud, nothing to say here. Indeterminate chop probably needs 6 weeks at least. I mean, look at these other chop periods in 2023, in mid 2024. It just takes time to recover after this technical damage that we had. I don't really expect anything here trend wise. This could double bottom. This could bounce back and make new all-time highs in a couple weeks. But as we sit here, there's just nothing to do. Something else to think about: if the Fed starts their cutting cycle, a lot of people just assume cuts are bearish for the market because they usually are. But if you separate that out between growth, positive growth, negative growth, weak growth, strong growth, averages for the market post cuts, if no recession, are quite strong. But again, I think most people are in the orange camp, where most of the numbers are pointing to a recession. They're not as bad as you'd want them to be if you are pro-recession. Things can always get much, much worse. But we're well on our way to potentially hitting the tripwires there. So depending on who you ask, they will say, yeah, we're guaranteed on this orange path. And that's fair, but I'm not as pessimistic just yet. I think we need to see a little bit more. We need to see what happens when the yield curve uninverts, what happens with unemployment, and ultimately what happens after rates come down. But definitely something to think about. Obviously, everyone's already watching. It just feels like a crowded trade. Everybody assumes markets are going to go down if rates go down. NASDAQ, same thing. There's just no trend here. If anything, this is even more bearish than the S&P. Cloud's going to flip bearish today. Bearish DK cross, price below cloud. Nothing on this chart suggests a long trade. Nothing. So as a group in aggregate, most of the tech stuff should look bearish to choppy. IWM also gave back all the gains. Nothing to do here whatsoever. No trend, no pattern, just nothing. DJI, same thing. Just nothing. There's nothing here. There's just nothing to do. Time to go long, time to go short, time to go fishing, and we are in the time to go fishing category. Whole lot of chop. Lots of non-directionless nothing. For the Mag 7, NVIDIA, right? You're going to see what you're seeing in the indices in all of the Mag 7, most likely. NVIDIA is indeterminate chop. This could recover easily, just like it did the previous two in October. It recovered in April, May. It recovered. They've got earnings August 28th. Maybe that'll be something. I don't know, right? But trend-wise, there's nothing here. You need to see bullish TK cross, price above cloud. It's that simple. And you just don't have it. Unsurprisingly, SMH as a group also looks bearish. Just nothing to do here on the long side for me. Apple, tons of chop. Was this a head and shoulders? Is this a diamond? I know a bunch of people are flipping out about Buffett selling. I thought that was telegraphed in advance, so I don't know why people were flipping out at that. This is also not a long based on the cloud rules. You're getting a bearish TK cross here on the daily. So if you took a long down here, this would be your close signal if you weren't using a trailing stop loss. So nothing to do on Apple. Microsoft below the cloud, also nothing to do here. Similar to DXY, maybe a bear div down here, even similar to BTC, or sorry, bear flag, maybe a bear flag down here on a lot of the tech names. You don't have this inverted head and shoulders stuff like you had. You don't have a bullish DK cross. You have nothing. There's just nothing on your side for a bullish trend here. Amazon, exact same thing. Nothing suggestive of bullish continuation. Meta is probably the outlier in the group in that it is trend-wise at least holding the highs. Similar to 2023 into 2024, maybe this is one to keep an eye on at 540 to see if it can break that level and hold that level. I still don't necessarily love the structure here, but if you have to trade something, if I had to pick one of the Mag 7, it would be this one. It looks much better than the rest of the group. Google also trend-wise indeterminate, it's just chop, but it is still in this trend channel moving higher. So maybe if you're a channel enjoyer, you're just buying the bottom, selling the top. Other than that, not much else to do. Netflix, kind of the same. Up chop, just doing nothing. Very, very noisy, but it has continued to march higher. Tech sector as a group, very noisy on the past 6-8 months, but maybe you're watching for some sort of cup and handle into 2025 with a price above like 89. You know, any new high here is something to watch for bullish continuation. Not a shocker. Prices in price discovery, we're making all-time highs, but we're not there yet. We're definitely not there yet. But I would certainly set alerts. Even if you don't trade IGV, just set an alert at the all-time high to give you a heads up of, hey, maybe I need to pay attention here. But as a group, not much going on with IGV. Tesla, certainly not a buy and hold. Those days appear to be over. Will be the most volatile of the Mag 7, and it's just chopping around. There's nothing to do. 270 was the level. 240 was the level, all the way back down to the breakout. So this reiterates, this is not a buy and hold. This is a trade. Look for setups, look for trends. Nothing is on your side here. From a technical perspective, for a long, you might believe in Elon and Tesla and EVs. That's fine. The technicals do not support anything here for a long on Tesla at the moment. Just a few other individual names that look decent. Costco is just one I have on my radar because it's one of these highly traded, beloved companies. And unlike a lot of the Mag 7, it is back above the cloud, hinting at a bullish TK cross. I liked this setup more than I like the current setup because there was a triple bottom here. It did take a good bit of time to make those highs, to retake those highs. But the signal here is probably going to be equally as valid. From a valuations perspective, I'm not a fundamental person, but I think the valuation on this company is very outstretched here. Technicals still look much better than almost everything that I looked at today. At the very least, this looks like it wants to try for bullish continuation relative to everything else. Uber's another one that I got stopped out of at 68, I think, somewhere on the way down when I was highlighting this inverted head and shoulders, price above cloud. It's recovered a lot of that drop. And I think, again, one to watch, maybe not now for a trade, but just to see how it pans out here. If it breaks above the cloud, what is their AI strategy? What is their robo-taxi strategy, right? Relative to Tesla or whatever. Just something to think about because that's quite a bounce post-earnings. I like alerts at 73, thereabouts. Definitely not as strong as it was trend-wise late 2023 into 2024, but a bullish continuation is something to catch. A few others, KWEB, it's looked better, it's looked worse. If this makes a higher low and holds that higher low, I'm still in this trade. I still like it. I don't love it, but I like it. If it doesn't make a lower low, that's good. That's what you want. I like alerts at the highs here in the 30s. That's where I'll be adding more. Another Harris hedge type trade where if we see a Harris White House, probably less harsh on Chinese companies. At least that's probably going to be the market's perception. PFE, another Harris hedge type of trade, more pro science. I don't know, right? We're just spitballing here, but again, I don't love this trade. Definitely don't want it to make lower lows, but relative to everything else, or everything else is basically the inverse of this, where it's coming from a mega bull trend that is rounding off, and something like this coming off a mega bear trend that is trying to stabilize and round higher. Some crypto names, coin, potentially bear flag here, potentially triple top below the cloud. There's just, again, there's no bullish technicals here. There just aren't. It tried and tried and tried. It had triangles over and over again, but ultimately it broke down with everything else. And this is what we have left. And this is not bullish here. You want this above 230, at the very least. So that one's going to need some time. MSTR looks a little better. It's in the cloud at the very least. It's also got this triple top thing. It's got a triangle. It's got lots of triangles. It's near the midline of the pitchfork. Most of the early bull market and the bear market, it basically rode the bottom of this pitchfork. And hey, if you liked it at 230, you're going to love it at 130, right? This is post-split now. And the lower this goes in the pitchfork while holding the channel, the higher the multiple eventually, 2x, 3x, whatever, when we get to the 230 equivalent on the upswing. That might be in the 300s or 400s in Q4. So not great, not terrible. Just very middling. Not much going on there with MSTR. SMLR, the poor man's MSTR. All over the place. Super hyper volatile. I would definitely set alerts for this one. at like 39, price above the cloud, and just wait. Maybe this is some sort of inverted head and shoulders in the making, but a lot of these companies are just squeezed until rates come down. Lastly, of all the miners, I scanned them all before the video. There's really not much going on that's constructive or bullish, especially Mara, especially Riot. CleanSpark's back to 11, just as bearish as Coin. But of all the miners, something to watch would be BTBT, just because if it can hold this structure and not make a lower low, it's setting itself up again for a potential triple bottom into Q4. It had a not so pretty rounded bottom, triple bottom thing going into Q2 2023. And since then, it's just gone nowhere. So I like alerts on this one, 420, thereabouts. And broadly, it's probably a good time for most people to just do nothing and just wait for things to look better or worse. But overall, not too much going on almost anywhere, unless you're gold, unless you're TLT. And of course, if you want some excitement in your life, you can seek out the leveraged ETF equivalents of gold and TLT. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.